Welcome to the Travelex Weekly Outlook for September 12th. The dollar got off to a good start to the week of September 12th. It actually extended gains that it had enjoyed from the previous week. This has come amid escalating concerns about Europe's sovereign debt crisis. So as a result, that has helped fuel a steady demand for most safe haven currencies like the dollar and the Japanese yen. We have seen the single currency fall broadly. In fact, it's fallen to 7-month lows against the greenback. And it's also fallen to its lowest level in more than 10 years against the Japanese yen. This is coming once again on mounting concerns about Europe's debt crisis. We have seen concerns that the problems in Greece run the risk of inflicting more damage on some of the larger European nations like Italy, that is the Eurozone's third largest economy. So as a result, that has pushed up bond yield prices for government debt denominated in Italian government bonds, as well as bonds from Spain. So that really highlights the concern that investors have about holding euro-denominated assets. In fact, those concerns about what's going on with Europe, that has weighed on a broad class of risky assets that has sent stocks lower and even commodities. And under that backdrop, you tend to see the dollar gain as a safe haven destination for investors. But the dollar already off to a good start. It fared its best against some of the growth-reliant currencies. These are currencies like the Australian and Canadian dollars. The dollar rose to a 1-month high against the Aussie and also jumped to its best in 7.5 months against its Canadian counterpart. But for the previous week, it was one for the record books, really. We did see the dollar rise broadly, as most currencies did, against the Swiss franc. We did see the Swiss central bank basically cap the franc's upside appreciation against the euro. They had really intervened recently in the foreign exchange markets to help drive down the value of the franc, which has really started to erode confidence or even erode economic activity in Switzerland. In fact, for the week, the franc was down about 12% against the dollar. That was its worst weekly performance on record. The big problem, of course, is that the strong franc that helps push up the prices of exports that come out of Switzerland. It also has deterred vacation seekers from arriving in the Alpine country, given that items are more expensive in Switzerland. So that has really weighed on the Swiss economy. So as a result, after intervening recently, we have seen the Swiss authorities get increasingly aggressive in their efforts to tame franc appreciation. Keep in mind, we have seen the franc enjoy broad support. In fact, in recent weeks, the franc had climbed to a series of record highs against both the dollar and the euro. This is coming amid concerns about the Eurozone debt crisis and worries about the slow pace of the recovery underway in the U.S. That is something that had led to broad safe haven appeal for the Swiss franc. But now that the Swiss franc is somewhat tarnished as a safe haven currency, that could spell better news for both the dollar and the Japanese yen. In fact, two safe haven alternatives that are faring pretty well in recent sessions. For the single currency, meanwhile, we have seen the euro return under heavy pressure against a lot of its major rivals. This is coming on concerns that Greece may head down the road to a debt default, a potentially messy debt default. This is coming as debt talks on Athens' second bailout package remain stalled. So the longer that stalemate remains on approving Greece's second bailout fund, that does increase the risk that Athens might default on its debt. So that is really driving investors away from the single currency. Further complicating matters for the single currency has been was news last week that the European Central Bank's top economist decided to step down. In fact, he plans to leave by the end of the year. I think that underscores concerns about how European officials are really addressing the debt crisis. In fact, the chief economist's departure comes at a particularly precarious time for the central bank as it tries to get ahead of the debt crisis. So that is something that is only adding to the euro's broadly heavier tone. Given the persistent weakness of the persistent nature of the Eurozone debt crisis, the euro could be poised for further declines in the coming weeks. In fact, to that end, I think investors will really see whether or not the dollar can sustain its gains, because keep in mind, though, even though the dollar has been appreciating against the euro and some of its other major counterparts, this is largely the product of euro weakness rather than any type of fundamental improvement in the U.S. dollar or the outlook for the U.S. economy. So in order to better the odds of the dollar sustaining its gains over basically beyond the short term, investors want to see signs of the U.S. economy gaining strength. In fact, to that end, investors in the coming week will look at key inflation data on the U.S. economy, as well as retail sales and regional manufacturing surveys from New York and the Mid-Atlantic regions. If we show signs of a pickup in those economies or those sectors of the economy, that would tend to be dollar supportive as well. But that's going to do it for the latest on the dollar. Feel free to check us out online.